Hello, investors. Welcome to the channel where I use technical analysis to find possible swing trades. Before I get started, I'd like to make it clear I'm not a financial advisor. Everything I say is for informational, educational, and entertainment purposes. The technical indicators I use are not accurate 100% of the time. Company fundamentals and macroeconomic factors can drive share price changes in companies differently than what we'd expect based on technical indicators. My goal is to bring these companies to your attention so you can decide for yourself whether or not they're good investments for you. So please, if you plan on investing, do your own due diligence before purchasing shares in any company, or consult with a financial advisor. That said, today we're looking at PepsiCo Inc., ticker symbol PEP. This is a very well-known large cap company with a market cap of $264 billion. It probably does not need much of an introduction. It is well known all around the world. And here we are on Pepsi's annual chart. You can see first that Pepsi makes these very nice, predictable, gradual up and down trends, very much like what you would want to see. This is an uptrend. It's a slight uptrend, but still it's an uptrend, and given the market over the last couple of years, that's a great thing. However, for the last 1.5 trading weeks or so, Pepsi has been in a sharp downtrend. In fact, yesterday it posted this giant red candle, which really threw off the curve. And I'm going to scroll down just a bit and come back to this. As you can see in the RSI, there's this noticeable drop in the graph here, graphing line. Same thing on the stochastics. They are falling very sharply. The slow stochastic just touching into the oversold zone, while the fast stochastic is well into the oversold zone also. The volume isn't really greater or lesser than it normally is. But of course, as you'd expect, there's been quite a bit of red lately. And the MACD, again, like the chart, you can see that it was dropping below zero. It has not reached the trough yet, or it hadn't. And the latest candle here below zero is noticeably bigger than all the preceding candles leading up to it. And instead of just following this nice gradual line that was forming, it really dropped. So if we go back and take a look at the chart again, this significant drop makes me think that we might actually get a very short-term rise in share price. These sorts of things are, it tends to be an overreaction, as I'm sure many of you know. So we might see a bit of a jump back toward where the share price was, up towards 190. But overall, I think Pepsi is in for a downtrend here. Again, short to medium term, just like we've seen over the last year. And if you were to zoom out the chart, you'd see Pepsi's been following the same pattern for quite some time. So I'd like to see the share price Pepsi drop down to the 175, 180 range here, maybe as it has before here, just slightly below the 200-day, wherever that ends up being, if we were to continue this line further out. So as I also like to do, I'll switch over to E-Trade and take a brief overview of the fundamentals of the company. And as you'd expect, many of these metrics are quite strong. It's very low short interest, solid institutional ownership. The debt to equity ratio is high, admittedly, and though that's for the industry. Of course, I've seen higher debt to equity ratios and other things like REITs and such, but Pepsi, I would expect, given that they have to manufacture things, that they own a lot of buildings and properties, that they will have significant debt, probably for their equipment and leases and mortgages and long-term payments like that, that they need to run their businesses. Now, the PE ratio here is just about 40, which is greater than 93% of other companies in the industry. And while I would agree that Pepsi is probably better than 93% of other companies in their industry, or if not even more than that, 40 is a bit rich for my taste. I would like to see that come down before I begin purchasing shares again here. And the gross margins, operating margins are excellent. Gross margin beats out 86% of others, and operating margin beats out 67% of others, both well above average. The return on equity, again, excellent, beats out 93% of its peers. Now we come to the lone dark clouds in the sky for Pepsi. That is the growth rate is less than average here, less than 62% of its peers. Given the size of the company, though, I don't see that as being a huge problem. You wouldn't expect a really big company to grow as fast as a smaller company. But still, had I a choice in the matter, I would like to see this number higher. And the dividend. Now, this is surprising that the dividend payout ratio is so high, 95%. That's a tough pill to swallow. While the dividend itself at 2.64% is average for the industry, that 95% payout ratio is dangerously high. And the company is going to need to address that, I would think, at some point in the future. But in any case, I took a look at Pepsi and I saw this huge red candle. And I think that, again, might be an overreaction. So I think today, tomorrow, we might see a sharp rise. And then we should continue this downtrend in the medium term. But please, let me know what you think in the comments below. And as always, if you got something out of this video, I'd really appreciate it if you hit the like button and subscribe to help out the channel. If you like these brief overviews of companies that might be good swing trades, please leave a comment for the YouTube algorithm. If you'd prefer to tell me how wrong I am, you can leave those comments below as well. Also, if you'd like me to take a look at a particular company using the indicators I present here, mention that in the comments section and I'll get to it as soon as I can. That's all for today. Thanks for watching and good luck with all your investments.